on Wall Street. Lori Calvasina joins us, head of U.S. equity strategy at RBC Capital Markets. Lori, you were looking at the market internals when Powell was speaking today in Washington. What did you notice about what popped?
So, what I was watching, Sarah, and I'll say whenever we have Fed Speak events, I always like to watch the sectors in the S&P. And what I saw today, what I was really focusing on was how tech, communication services, and consumer discretionary were acting. And that's because if you look back historically into the mid-1990s, those are the three sectors that have tended to perform the best in the 6-month period following final Fed rate hikes. So we really wanted to see how those sectors were acting. And as markets were rallying, we really saw those sectors take off like a rocket. So it told me that what markets were initially hearing from Powell was really the idea that we're closer to the end of this cycle. And then, of course, we saw the market take a hit. Those sectors took a hit. But then they've all, done well towards the end of the day. So I think the market got a little confused and had to digest some of those later comments about the labor market, but ultimately came to the conclusion that we're still closer to the end of this hiking cycle.
And really taking off now. We're at the highs of the day. The Dow's up 300 points. The S&P 500 up 1.4%. More sectors turning green, including consumer discretionary, had been lagging because of Amazon. So, Lori, is that the right take? Are you a buyer? We've already had quite a nice rally here, 19% off the lows for the S&P.
Sarah, we're a little bit above my target of 4,100, but we did say coming into this year that if there was a risk to our view, and we ended up being wrong, that we thought the risk was to the upside. And we put a piece out yesterday walking through some math on valuation saying we could see potential upside to 4,500. Now, my base case is still 4,100. I think that, it's interesting, right, that we haven't had the final hike yet. Markets are already pulling that forward. So I feel like the markets have gotten a little bit ahead of themselves in here. It might be time just to exhale and take a little bit of a breather. But in general, Sarah, I find myself really pushing back against the bears in the strategy world. I think that it is quite possible that we saw the lows in October. I think we're going through that final leg of earnings downgrades right now, and markets typically bottom 3 to 6 months before you get the final earnings downgrades in. So I think we're probably preparing for a little bit of chop in here, maybe a little bit of digestion. But in general, I think the bears have overstayed their welcome.
Well, that was the bear case. All of the strategists were saying this is the year of the economic slowdown and the earnings downgrades and revisions lower. And we haven't felt that impact of recession or a slowdown yet because of all the Fed tightening. Is that still coming, or is it being priced out?
I think that what you are starting to see are some hints of slowing demand, some softening in certain industries. We're starting to see some companies talk about that. And frankly, that's good news for market, Sarah, because we want to get whatever this is, whether it's recession with a capital or a little hard growth scare or something similar, we want to get it out of the way. Because if you look at that pricing on the October lows, we were down about 25% from peak. And that is pretty close to a median recession. A median recession drawdown is about 27%. So if the economic pain, if we're in the midst of it now and we get it out of the way relatively soon, again, that October low can hold from a timing perspective.
Lori Calvasina, thank you very much for talking through the strategy into the close. Appreciate it. We've got less than 2 minutes to go. Very strong rally now.